But excessive risk-taking and poor governance are key among a myriad of reasons accounted for the revocation of the licenses of 23 financial institutions. That's according to the Deputy Director of the Banking Supervision Department at the Bank of Ghana. Mr. Elliot Amoako, the latest crackdown forms part of the central bank's strategy to clean up the financial sector and rebuild the public's confidence in its operations. These and many others came up in an exclusive interview with JoyNews' head of investigative desk, Malik Dabu.
The past 2 years has not been very easy. We've had to embark on this very difficult journey of cleaning up the banking system. So yes, it's been a difficult journey.
So this is a cleanup?
Yes, as we've put out previously, beginning with the banks, an attempt was made at comprehensively cleaning up the banking system. That was based on information that we had that most of these institutions didn't have good asset quality. So this journey began, which started with the revocation of licenses of 2 banks in 2017, and what had followed on.
You're talking Capital Bank and UT Bank.
Yes, what had followed on therefrom. In total, 9 banks had their licenses revoked.
Notably, all of them domestic or local banks, or indigenous banks, the majority of them.
Well, the majority of them, yes. And then followed up with the microfinance institutions early this year. And then this is the last set, which is for the savings and loans and the finance house subsectors.
Let's start from that last point, which is where it's bleeding currently. At 23 of them, you said that all 23 of them were insolvent. For the layman, what does that mean?
Yeah, now when we say the institutions are insolvent, it means they are not carrying the appropriate capital that they require per the regulatory requirements to operate as a viable banking institution. So either capital is impaired or non-existent, which is culminating in maybe serious liquidity challenges as well.
And you're using technical terms, capital is impaired or non-existent. What do you mean by capital is impaired? Because as far as the customers know, the institutions are functioning. They can get their money when they want it.
Well, as a requirement for a bank to be licensed to take depositors' funds, it's required that shareholders would put in their stake, which is the capital that the shareholders themselves put in, to ensure that the depositors' funds would be safeguarded in the case where the funds are stressed. We have a requirement, and for that subsector, the banks are required to hold capital of a minimum of 50 million, those institutions in that category. Now, when we say the capital is impaired, it means that the institution has either through bad decisions or taking risks and eroded their funds, their shareholders' funds, to the point that they are insolvent. They are not carrying the appropriate capital to carry on their business of banking.
So you're saying the minimum capital that was required by these savings and loans companies was 15 million?
Yeah.
And when did you come to this realization that either the funds have been dissipated or that led to them being impaired, or they were not existent in the first place?
Yes, and as we indicated in our press release, yes, this journey has started way back. And per our procedures, supervision is an ongoing thing. So you go into an institution and you determine that transactions have not gone very well and they are not holding their appropriate capital. Now, our law requires us to go through certain processes. So for all the 23 institutions, they would have come in at different times. You do not have the same set of standards for everybody in terms of when you detected that they were insolvent. But what we've indicated is that we take them through various processes. What the law requires is that if your capital is impaired, we need to take you through a certain set of processes, which includes giving shareholders the ample opportunity to recapitalize the institution to the point where we believe it is viable and that depositors' funds with them will be safe. Okay, so for different institutions, they happen at different stages. But what we've also indicated is that we've taken all of them through these legal processes, giving them time and space to, on their own, rectify these capital deficiencies. But unfortunately, for these 23, they were not able to.
So you're saying all these 23 were given the opportunity that the law establishing them, or the regulations provided for?
Yes.
And they didn't meet it?
Yes. And it starts even way before that. I mean, even before you get to the point of even being insolvent, when we determine that your capital is impaired below a certain limit, not to the point of insolvency, our guidelines gives us certain procedures that we take you through, including giving you the required number of days for you to recapitalize, and shareholders have been taken through.
How long have they been in this state?
It varies. Like I said, these are 23 institutions. It varies from institution to institution. But
well, let's stay on the financial sector. An industry player and financial analyst, Roderick Ayer, breaks down the situation in which the affected institutions have found themselves and suggests ways for them to get out of the current mess.
Thing is actually in the interest of customers first. I mean, the BOG's action is more to protect the depositors or the consumers, and so consumers must take it as a welcoming news. I'm saying so because, I mean, there are evidence of people who have their deposit in these financial institutions, and they have been chasing them for 3 to 4 years and still having stories. Nobody knew, or nobody knows when the liquidity positions of these institutions are going to be, beefed up. So what it meant was that, had it not been the Bank of Ghana's action, the likelihood of you taking or receiving your deposits is going to take a long time. And so the whole action, if you read and you follow, it's in the interest of the depositor. That is why this action would actually lead to a receiver, where the receiver would ensure that people who have their deposits with these institutions can have their money back. So basically that's what I think is in the interest of depositors.
At the end of the day, we also know that these actions, if you do the calculation, ultimately will benefit the depositors. Yeah. But how much would they be recovering as far as their deposits are concerned, and also whatever investment that they have made with these companies?
Well, if you listen to or you read the announcement from BOG, nobody has put a cap to it as we speak now. So what it means is that all things being equal, I mean, people are going to have their funds the way they left it at the financial institutions once they have the proper record and it's been validated, same by the receiver. The likelihood you having your your deposits is very high for amount of deposits that it has. So there's no cap as far as I'm concerned as to how much you can take. What it means is that you can actually have all your money locked up. Yeah.
If you look at what may have happened, when we talk about the fallout from the commercial banks, them going into receivership and the consolidation thereof that may have happened subsequently, we've had the insight into the reports and what the position of the Bank of Ghana is regarding the actions or inactions of directors and shareholders, and it looks like it seemed to be the same pattern this time around. But from the first instance, nobody has been held accountable, and now it looks like it's going to be the same. Can we do that conclusion?
Well, I cannot really say it's going to be the same. I mean, I'm not a lawyer. I'm only looking at the psychology of consumers and the effect of some of these things on our financial sector. I think it will take a lot of processes or procedure to have this thing legally cleaned up.